What is going on, everyone? Happy Friday and welcome back to Sin City Crypto Live. My name is David. I'll be one of your hosts today. Today, like every day, we're coming at you live from our studio here in Las Vegas, Nevada with our daily live show. Today, big news as the Twitter acquisition finally goes through. Elon Musk, the new CEO, partnerships are being made with Binance. We'll talk about that. And Visa to launch a crypto wallet. And much, much more. Also, today is Forrest Day. We have Forrest from Crypto Stacker joining us in about 15 minutes. But before we get into the content, I'll introduce you to your second co-host, Big Rob. What's up?
Hola! It's your boy Big Rob back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We have short-form content and active on social media. And then, real quick, let's get into that roll call. Acknowledge new people up in the chat, which I don't have in front of me. Who's the first in the chat today, Rocco? All right, we got Broke Yoshi. Round of applause for Broke Yoshi. And then we also got Redman Fino, True Love, HP, Atomic Atom. We got Blake, Moby Sage, and then who else? Raul, Sean Burns Jr., and Hindi, Yazin Breakfast, Big Chili Willie, HP, Lightning Bolt, Servando, AZ, Chris Bullish Kenny G, Jason, Wes, and Vegas Freeballer, Crawler as well, and Carry Chaos. Hola! Welcome to Sin City Crypto. Skeezy as well. Hola.
Skeezy.
All right, cool. Bro, guess what?
What?
Guess what?
Yeah, I know.
Guess what? Bitcoin is pumping, bro. It is at 20,700. We are making we are since last night. We are making some new.
It's not even up 0.5%.
The bull market's back, baby. Yeah,
it's literally not even up 0.5%.
It's up though.
Okay.
Higher highs on the 24-hour.
Yeah. By half a week.
Yes.
Anyways, let's jump right into it. We got Forrest coming on in about 10 minutes. We're going to go over charts. We're going to talk about some Bitcoin. So taking a look at the coin market cap, we have the market cap coming in just over $1 trillion with the 24-hour volume, 88.5 billion. Bitcoin dominance and ETH dominance, it remains the same. Nothing has changed. Like Robin mentioned, Bitcoin coming in at $20,692. ETH up 20% over the last 7 days, sitting at $15.61, followed by Binance Chain, about to crack $300, up 4% over the last 24 hours, followed by XRP, which hasn't really moved, still sitting at that 47-cent mark, Cardano at 40 cents, and then Doge, 8 cents. Doge is up 45% over the last 7 days. Polkadot out of the top 10. Coming in at number 12 with $6.54.
Did Polygon flip?
Polygon did flip Polkadot. Yeah. Not by, by $1 billion. That's a lot.
Yeah.
To crack the top 10, you need to be in the teen billions, right? 11.38 billion is what Solana's coming in at. That's up 15% over the last 7 days. We swap over to the Bublés. On the day, we have Osmosis up 26.2%, followed by Doge, SHIB, Atom is up as well, Theta is up, and as far as some of the losers, Aptos, which had their token sale, they're down 8%, Casper down 2.8%, and Huobi Global Tokens down 2.3%. If you take a look at the Crypto Fear Greed Index, coming in at 30, which is not extreme fear, which is good. But it did dip from yesterday. Yesterday we came in at 32, currently sitting at 30. So if you're not familiar with this, essentially gauges a sentiment around traders or people in crypto, whether they're fearful, obviously, Yeah, 4 levels: extreme fear, fear, neutral, greed, and extreme greed. It's actually 5 levels. And if we take a peek at the traditional stock market, now Amazon yesterday, after hours, dropped $200 billion of Amazon market cap was completely wiped off the books. Their earnings came in. I believe they missed their earnings, and so the market tanked. But currently, we're in the green. Dow Jones up 756 points, S&P up 2%, and NASDAQ up 2.5% as well. If you take a look at it, so I'm kind of take a look at gold.
You know what? We don't really have 50 people in the chat. Where is everybody at? You know, let's get the people in here. How do we get people in here? We get them in here with this like sign that is one of my greatest life achievements. It is a thumb represented in the YouTube right below the video. There's a thumbs up button. You hit that, and it brings more energy to this channel.
Wow. Anyway, so gold coming in at $1,644. If we take a look at the gold chart really quick, not going to go too into depth. But if you take a look at the 1 year, gold has been going down, which, you know, you hear from people like Peter Schiff and all these, all the old money. Gold is a hedge against inflation. Gold is a hedge against inflation. Well, guess what? Gold has not been a hedge against inflation. Going back to March of this year, gold has gone from over $2,000 an ounce to under $1,650. So
it's funny how, you know, I was talking to somebody last week, and they asked me like, "Hey, what stocks should I buy?" And I was like,
none.
Well, I'm not really the stock guy, but I mean, you know, threw some index funds at him. I'm like, I mean, you want some insight on some crypto? I got you. And they were like, well, you know, I bought Cardano a while ago, and it's so far down. And I was just like, you do realize that everything's down, right? I'm like, it's not just crypto. Yes, crypto's down by a lot.
Dude, Meta,
but gold
Netflix,
is down. I mean, the S&P 500, the NASDAQ, any tech stock, Tesla's way down, Google's down, Amazon is down, Meta's down. Everything is down. And so I just think it's funny how people just look at crypto. They're like, you know what? I bought that at $1 and it's at 20 cents now. I mean, I ain't buying it again. Like, have you bought any stocks in that same time window? Have you? Sorry.
You know, I mentioned Amazon. Just kind of take a look at their chart real quick. This was the dip I was talking about yesterday. Went from about $115 down to 101, which equates to about $200 billion, which is the entire market cap of Ethereum. And so when you have companies like Amazon, who's the king of online retail, argue it's the king of retail, period. If their stock is tanking and getting $200 billion wiped out, what does that say for the rest? Right? So,
all right. We do got a few new people in the chat. So quick shout out. We got Mr. Anderson NZ. Is that in Nevada to Arizona? And then we also have Corey Laurie and Sean Behringer. No, he's been here before. Anyways, hola! How y'all doing? If you're new here, say hello. Soy Chabadonla.
Sweet. And then one article to cover before we bring the man. By the way, if you're excited for Forest, drop a Forest emoji if you're a channel member. And if you're not a channel member and you want to become one and support the channel, the link is in the description. Pending home sales fell 10% in September, much worse than expected. But still, it's important to remember, guys, people still have a lot of equity in their homes, especially if you bought from 2019 to 2020 after the pandemic crash. Pending home sales suffered a worse decline than expected from August to September as mortgage rates surged. Economists have predicted a 4% drop. Sales were down 31% over the year, excluding 2020 of April of 2020. The pending home sales index is at its lowest level since June of 2010. Are you concerned at all about people, just letting their homes go, kind of like they did in 08, getting foreclosed on, people not being able to pay their payments?
Hell no. Here's the thing. Times are different. You foreclose on your house, what are you gonna do? Go get an apartment for $2,200? Like, I mean, honestly, if you're a little underwater on your mortgage, you're looking here, you're like, all right, I got mortgage. Okay, option A, pay my mortgage. That's $1,800. Or I can foreclose on this, destroy my credit, be without a house for a little while, not pay anything for 6 months, and then hey, I can go move into an apartment. Good luck getting approved for it. And if I do get approved for it, probably going to be paying for the same size or square footage, or at least something comparable with multiple rooms. You're going to be over $2,000. Is that worth it? And then at that point, you don't own the asset. Little different than in the past, during the 2008. During the 2008 crisis, you had a situation where you had people that had mortgages out for homes of $300,000, $250,000, and then the price dropped all the way down to like $80,000 for a house. And so you just had people just losing their house. They were just trying to rent anything for $500, you know? They were just trying to survive. We ain't got that situation right now. But there are some conflicting things going on in the markets right now. You have GDP coming in at positive, which we had 2 negative quarters of GDP. You have what is shaping up to be probably a market rally, whether or not it's a bear market rally that pulls back, a dead cat bounce. Either way, you're probably going to get a relief here. We're probably going to see some juice in the markets. We're seeing in the last few days, we've been getting a lot of green in traditional markets. But at the same time, you got home prices falling. You have the Fed tightening interest rates. You have less borrowing from corporations. You have profits from the major companies coming in substantially lower than expected. The biggest companies in America and around the world are hemorrhaging right now. And you take all of this and you zoom out a little bit, man. You take all these energy issues over there in Europe. I'm telling you, rally, pull back, further lows, wipe out the market, crash some crap, and then we'll be back on track 2023. Mid-2023.
So you hear the big news?
What's that? Sin City Crypto's doing a Halloween special on Monday. Is that the news?
No.
Oh.
The news. Elon is officially the owner of Twitter. And this is how he made his grand entrance. So that's him carrying a sink. Okay. He walked in there, and apparently you can't hear it in the audio, but made a comment. Let that sink in. He's got a good sense of humor, man. I like Elon. He came in there. He did fire the CEO. He now assumed the position of CEO. He also fired some other executives. A lot of changes are coming to Twitter. Majority of them that I've read relating to crypto is good. Relating to everything else, good as well. I know they're going to reinstate a lot of accounts. I know they're going to reinstate Donald Trump's account. I know they're going to reinstate a few other ones where...
Bro, media in general, whether or not you liked or hated Trump, content was just a lot juicier when Trump was around. I mean, there was no shortage of jokes and high-profile press conferences from Trump. And man, when we were locked up at home and couldn't get out of the house, man, that was some entertainment, bro.
Yeah,
I was looking forward to it. I'm like, oh, hey, I'm telling my wife and my babe, I'm like, your boy Trump gonna be on. You're doing another press conference. This was brought to you by Bleach on at 1 p.m. I'm like, can't miss this one. She was like, well, where the hell are we gonna go anyways? I'm like, I don't know, but we ain't going nowhere. We ain't going outside. We ain't doing no gardening. And anyways, man, I'm excited. I'm not even a Trump guy. I'm not a Trump guy. I'm not huge into politics. Whatever. I'm not even a Trump guy. I don't despise him. I don't love him. I just not very well spoken when it comes to speeches. But anyways, I'm excited to have him back. I am. You're like, Twitter is gonna be fun again, man. At the real Donald Trump is going to be out here just tweeting some nonsense, man. And I am excited. I am also excited, as I referenced, for a Halloween special coming up Monday. Please do not miss our Halloween special, man. It is going to be so good. It's going to be so good. We have multiple guests coming on. Okay? I think we're patching in 3 guests. We got a TA person. We also got an XRP person.
Wow.
We also have a CEO of a major company coming.
Wait,
all
what?
on Halloween.
Are you serious?
Yeah.
Oh. How the hell did I not know?
You don't know about the CEO? We've
No,
been talking
you didn't
about it
tell
for
me.
like the last 24 hours. Man,
Huh.
You're clueless.
Yeah.
Anyways, I'm excited, dude. It's going to be a great show. And so we're going to theme it out. We're going to dress up. Let us know what you guys plan on doing for Halloween. What kind of candy you're going to be giving out. Because
Do you do trick-or-treating at your house? Like you have candy for the kids?
yeah, man, of course. Yeah. I mean, yeah.
Okay.
I used to like decorate my house and those like weird spiderweb things and just caught up everywhere.
My wife bought a giant spider and put it in the front.
Oh, yeah?
Yeah. Interesting.
You scared of spiders?
I'm very scared of spiders. Actually, I hate spiders. I didn't used to like reptiles either. Reptilians were not my favorite. But we got a bearded dragon. That thing's pretty dope, man. I got to bring him in one day. His name is Bitcoin. He's gold colored. Pretty chill. So, yeah. All right. Before we bring Forrest on, there's one thing I wanted to share. And then we'll get his take on this as well. So this is from Horizon Kinetics, okay? Observation. In the first 3 quarters of 2022, global equity and debt markets lost $92 trillion in value. Consider that global GDP for 2021 totaled $96.3 trillion, compared to 2008 when global markets lost $17 trillion in the first 3 quarters, while the GDP globally was $58 trillion. So, and you can see on the chart here on the, let me see if I can get rid of this text on them. There we go. This little chart here, okay? Top, September 2022. Bottom, September 2008. Global debt in 2021 for the market value was $302 trillion. Value lost was 19%. Global equity was $124 trillion. Value lost was 25%, netting 21.56%, $92.15 trillion in value lost globally. That is a lot of money. Is this concerning to you, Rob? $92 trillion in value lost globally, which is about 90-something% of the global GDP from last year. I mean, look at these numbers. Last year, GDP, 96.3. This year, lost 92 trillion.
Ain't good, bro. I'm telling you, man, here's the thing. But the headline number was that GDP growth is up, right? Quarter over quarter. That's where they get misleading.
Here's what okay, so if you're not familiar with how they measure GDP, okay? Consumer spending, business spending, government spending, net exports, imports minus exports. You add all that together, divide, that equals your GDP, okay? Let's break it down. Consumer spending. Okay, we can say consumer spending was up. Business spending. And we don't have the numbers, right? We're just saying things we see and follow every day. Would you say business spending was up or business spending was down? You would assume it was down, right? Mm-hmm. Government spending. We know for a fact that was down compared to previous quarters, right? And then net import and export. You have the Dixie that kept going up. So the dollar value got stronger. We talk about this all the time. As the dollar gets stronger against foreign currencies, it becomes more expensive for foreign countries to import goods from America because you need more of your currency to buy more dollars to purchase products from America on top of inflation. So our export numbers were down, but our import numbers were up because the dollar is stronger. Now we need less dollars to buy foreign products. So I don't know. I don't know how the hell we went from negative 1.3 to negative 0.5, and now we're up 2.6 over the last 3 quarters. I don't know, man.
And real quick, I just want to give a quick shout out to we got Joshua, J-Fu, and then one other person, Ron Wild. Hola! Welcome, Sin City Crypto.
Yes. We're having some technical difficulties before, so we'll bring him on here.
We got him on. He's ready. Is he ready to go, Rocco? Yes, he is. All right. Without further ado, let's bring the man up.
Finger tornado. Forrest.
What's up, guys?
Missed you, bro. How you been?
Missed you too. Good. This market, it's when things go according to plan, it's nice. It's nice when you get bullish and then the market goes up.
Yay.
You are just looking fresh, man.
You're looking fresh, bro.
Yeah, you got a glow to you. It must be that 20,000K Bitcoin
Listen,
glow,
bro,
man.
if TA doesn't work out, GQ. GQ.
Yeah, my complexion is correlated with the market, so if we go back down, I'll be looking rough.
That's awesome. Forrest, thanks so much for joining us again. I'm not sure if you caught this, but I'll kind of share my laptop again. So this is showing asset class performance September 2022 versus September of 2008. And I'll kind of make this here. In the first 3 quarters of 2022, global equity and debt markets lost 92 trillion in value compared to 96.3 trillion of global GDP. In comparison, in 08, global GDP was 58 trillion and markets lost 17 trillion. Obviously, the percentages are out of whack. A, is this surprising? B, is this concerning?
Yeah, so these are the kind of things where I think it's concerning in kind of the longer term, but as far as this melt up or this bear market rally, whatever you want to call it, it goes to show that a lot of people were waiting for a big capitulation. A lot of people were like, oh, recession's coming, and technically we were in a recession or whatever, just like this awkward kind of straddling the line between recession and not recession. But everyone was like, where's the capitulation? Normally, the one data point that people don't that they look at and then they don't even normalize with based on GDP or money supply or anything else, is they look at the drawdown of the S&P 500. That's just some magic variable that's going to teach us everything that we need to know about this bear market or recession. And they say, well, in the past, we've seen a 40, 50, 60% drawdown in recessions. So until the S&P 500 drops 50%, then, we haven't really seen pain yet. And it's like, well, when you start to look at some of these other areas of the market, or you compare it to GDP, in the value loss, like you just did, it's down bad. It's down really bad. The bond market capitulated, the risk off asset capitulated worse than the risk on asset. We saw capitulation. We just didn't necessarily see it in the thing that everybody likes to pay attention to. So
Isn't that weird?
we've seen capitulation.
Isn't it? Is it me, or is this weird? What we're seeing, typically in recessions or when the economy's down, risk-off assets go. The gold's been down since March of this year. It's supposed to be an inflation hedge. Treasury yields are going up. I don't know. To me, it's weird. There's a lot of weird things happening. And so that's why I feel like, we really don't know what's coming. Crypto has never been in this environment, and so it'll be interesting to see.
So that was a snapshot at 2008 compared to now. So on Monday, 2008, 14 years ago, we had the release of the Bitcoin white paper.
Halloween, that's right.
Yeah, if we're gonna compare 2008 to now, that's interesting. Another snapshot as well. Speaking of Monday, Forrest, you gonna be sending us a video on Monday? Halloween?
Yeah, absolutely.
I don't know if you're busy with with decorations. All right, we're having a Halloween special. We have Halloween special this Monday. So we got some high profile guests. We got a CEO of a major company coming on.
Oh, okay, now I know what you're talking about.
And then we got, yeah, you figured it out.
Yeah.
We also got 2 other guests coming on. And anyways, we're all dressing up, man. So we
all right,
thought,
so I need to find a costume.
Yeah, if you got a little something there to partake in the celebration, and then also if you have like perhaps a nightmare scenario, a
Spooky chart.
spooky chart. Yeah.
Spooky charts. Yeah. Spooky charts out there. Just we'll pull up bond yields.
maybe
Yes. That's a good one. Here's your spooky chart for the day.
like yeah, what's the full moon ratio thing where it's like you get pumps on the full moons?
No idea. That's not my expertise. But I'm glad you brought up Bitcoin, Robin, because I want to spend some time talking about Bitcoin. You did do a video for us. The Monday video was on Bitcoin and more specifically hash rate difficulty and mining. We'll get into that in a second, but I want to share this. Bitcoin just recorded its largest net outflow from exchanges in 6 months. Over 70,000 Bitcoin worth approximately $1.5 billion left exchanges on October 26th. Couple that with the news, and I'm not sure if you heard this, I'm pretty sure you have, but Core Scientific might file bankruptcy. We covered this yesterday. This kind of stems from Celsius. They have not been paying their bills to Core Scientific, which Core Scientific hosts a lot of their mining rigs for Celsius. That coupled with the amount of money they spent on new ASICs in April of this year, everything getting more expensive, the Bitcoin price being down, energy going up, they might have to declare bankruptcy. And so I just kind of want your general thoughts for us. I don't think a bankruptcy, well, it depends. If it's Chapter 11, I don't think that's that big of a deal. Well, everyone's freaking out saying they're going to go under, they're going to sell their rigs. No, they're going to restructure. They're going to restructure their debt. They're right. I mean, what are your thoughts on the whole situation?
Yeah, I mean, I can't speak to their financials or that specific example, but I think we're going to see a lot more of that in the coming years and probably even decades, the next market cycles. I personally, you guys know my opinions on Bitcoin. I'm not the most constructive on it in the world now. However, I do respect the fact that it's until proven otherwise, Bitcoin's king, has the strongest community. The thing with Bitcoin mining is I honestly. I think it's a really bad business model. Why would you take on a ridiculous amount of debt to start a business that is dependent on two variables that you cannot control: energy prices and the risk appetite of the market for risk assets or Bitcoin, right? You're basically betting on the price of Bitcoin going up. If the price of Bitcoin doesn't go up and surpass, the unit cost of mining a Bitcoin, then you have a situation where your business is unprofitable, and it's commonly unprofitable, or it's in a bear market. It's common to see Bitcoin mining become unprofitable for periods of time, like it is right now. So, I would just why start a business and take on all this risk to bet on the price of Bitcoin going up when you could just take on a bunch of debt and buy spot Bitcoin or buy Bitcoin and Ethereum and several other assets and diversify your risk by going all in on a Bitcoin mining business. Like you are not diversified whatsoever. You're completely dependent on the success of Bitcoin, which, look, I know a lot of people are like die hard. They believe Bitcoin's going to be the end all be all. It's going to take over the world. I'm not convinced of that. I'm not saying it's not going to happen, but I'm not convinced of that. I don't understand I don't understand why people would give a business a loan to mine Bitcoin. Like, why as a bank or as a financer, why would you give a loan to somebody to go mine Bitcoin, which is a really, like, why not take that money and just buy spot exposure to Bitcoin when it's in a bear market and play Bitcoin that way, rather than finance a mining company in a bull market and then watch Bitcoin just crash and the unit economics not work out. And then you also have the potential for expensive energy on the back end.
The issue and I know we've discussed this a few times, but the big issue for me is that just going forward, the scaling of the entire business model, it just seems a little ridiculous. And even now where, you walk around and you ask, we do crypto street interviews, you ask the general public, you got any exposure to Bitcoin, you want to discuss it on camera, or you get people really excited. They see the cameras out there on the strip. They want to talk about whatever they just want to be on camera.
They want to give shout outs to their family members.
And then they're like, oh, you're talking about Bitcoin. And then like, you have any? Like, nah. Yeah, like people are aware, they're conscious of what it is, but there's just very little exposure when it comes to the general public. And so the idea that everyone's going to have Bitcoin and transact with it, if that is the case that the Bitcoin bulls make, or the maxis, is that everybody's going to use it. All these companies and corporations are going to have it on their balance sheets, and it's going to be a faster form of payment with the Lightning. Anyways, if that happens, you're going to be scaling the entire business model by factors of 10, 100, 1,000. And if you know anything about Bitcoin, is that the hash rate just keeps going up. The difficulty keeps going up. And you're going to need more and more energy, ASICs, overhead every single quarter, month, year to mine the same amount of Bitcoin. And if you took that same premise and just applied it to just other commodities, if you said, hey, you know what? Your gold mine that you have here, and let's just say you have an actual gold mine, and you're mining gold. Hey, you're going to need to pay 50 times more money now to mine gold as well, and you're only going to get half the amount. And I know that the argument or the pushback is that, well, that just shows you the supply shock. There's going to be less in the system. People are going to be willing to pay more money. But at some point, it ends up being just absurd. It becomes absurd that if all these people do start using it, what does the energy consumption look like down the road? What does it look like 20 years from now if nothing changes with the Bitcoin network and everyone is just trying to outdo each other on the mining scale? It's just, and if that was the only option, sure, it's better than what we have now. You know what I mean? It's better than the store of values we have now. It's better than the monetary system we have now. But the argument that I have is that there is technologies that are already built, that are evolving, that have the same characteristics and all the positivities of Bitcoin and in cryptocurrency.
No, they don't.
But yet,
no, they don't.
But yet,
they don't.
They're
not as decentralized and not as secure.
I mean, you can make an argument, but what is decentralized? Decentralized. What do you have? You have
what is
more people invested in mining units, but at the same time, you only have a handful. But what happens when Core Scientific goes out of business? All their ASICs bought up by their other competitors, and those competitors get bigger. They just swallow up, and there's just less players mining Bitcoin. You have a handful of crypto miners mining 90% of the Bitcoin. It's just the way it is.
I think a lot is lost on people as far as what the positive things that can come out of Bitcoin mining, right? You have miners that are currently using trapped methane that would have just done nothing but seep into the environment and ruin the ozone or whatever methane does to the environment, which is negative. And they're harnessing that and they're mining Bitcoin. Like, would you have ever had that if Bitcoin wasn't around?
Well, what happens when you have Marathon or say Core Scientific does get out of this, and they have 10 times as many miners? Let's just say 10 times as many ASICs, and they have 10 times the hash rate they have now, because that's the direction we're going. That we increase by a factor of like 5 to 10 every cycle, and if that happens again, then your methane capture person, they're going to get less Bitcoin rewards. It's going to be less incentive for them to keep running that. And if you go up 20 years from now, you're not going to, the methane little trap guy, he ain't going to be able to compete with the big miners. There's no way he's going to have enough hash rate to get the rewards. Not when you have warehouse after warehouse after warehouse after warehouse after warehouse just stacked up in lines, bro. That's who's going to get the mining reward, not a little trailer outside of a old well that's flaring gas. Like, that's right now. Yeah, you can get some rewards every once in a while, but not with the business model scaled up like they're supposed to.
Oh, no, I disagree. I think a lot more positive comes out of Bitcoin mining than people give credit for. All right, Forrest, you got some charts?
I've always got some charts.
My man.
There it is.
My man.
We also got some like button too.
We can, look, it's at the end of the day, there's so much to look at. We can look at whatever charts you guys are interested in. There are 2 to 3 charts I do want to just take a peek at here. This is the first one is the S&P 500 with our margin pressure levels and our risk to reward levels overlaid. And what we do see is we get some two nice big levels of confluence. And just look at the S&P 500 today. That's just beautiful. It's amazing. We had terrible earnings out of the tech sector. We saw tech sector capitulation yesterday with, I believe, well, all this week, really, I believe Apple, Microsoft, Amazon, and the other big one to just completely crap the bed. I'm blanking on it. Amazon
Meta?
and Meta, Facebook. Just So we had basically FANG, with the exception of Netflix. Netflix beats earnings and is just screaming right now, recovering quite a bit. But basically everything else in FANG crapped the bed. Yet the S&P 500 is still doing well, and I can't reiterate enough, how important it is to just pay attention to the easy signals. The easy signals. We were identifying this bullish divergence. I think we were talking about it back when Crypto Lifer was on the channel 2 weeks ago. About 2 weeks ago now. So we've been on this for 2 weeks, just saying bullish divergence in the S&P 500, bullish divergence in Bitcoin, bearish divergence in DXY. Those just basic weekly divergence signals that can really just signal a bottom or signal a local bottom. It's unwise, in my opinion, to ignore those, and it's actually very profitable to just be paying attention when the market's down and when nobody else wants to be paying attention to the market. So we have this big resistance level that we actually hit yesterday or the day before. We popped back down, and now we've just broken through it with quite a bit of volume, quite a bit of a really nice solid candle today, up 2% in the S&P 500. The next big resistance level that we have marked out here with our risk reward levels and our long and short margin pressure levels is sitting over here at around $4,000, just above $4,000. So this would be a really logical level for any type of bear market rally or relief bounce to come up to. And then, of course, we do have our S&P 500 downtrend line here, which maybe we do surpass this level and check up to that downtrend line. But you do want to consider, got rid of that. You do want to strongly consider de-risking, maybe looking for some shorts, maybe getting out of some of your long positions or your long trades up here towards maybe $4,100 or so towards this downtrend line for the S&P 500. I'll be looking to close some of my shorter term long trades, maybe look for some shorts if the S&P 500 can rally another, I believe it's about 3% to get back up to this level. Yeah, 3.2%. Now, keep in mind, this looks like it's far away, but if we have another solid bouncing week or bullish week next week, the S&P 500 just carved out 2% today. It's up 2% today. We're only 3% away from this level. So, do I think that it's a all new bull market and we're going to all-time highs? Not necessarily. That's not my base case. I've been very clear, though, that is a scenario that I do give respect to. There's analysts that I respect that do think that we are going to go see new all-time highs, and then the Fed is going to have deflation. It will have basically oversteered and overcorrected, and we could potentially have deflation on our hands. And then we see a worse crash after a new set of all-time highs. Now, that's not my base case, but it's a theory that I do want to respect and pay attention to, because that's a situation where you can get absolutely wrecked if you're not paying attention, and that actually happens. Wrecked in the sense that you miss out on the risk on, and then you get risk on too late, and it comes back down.
Hey, Forrest. So
I do want to look at this chart. Oh, go ahead.
We know why inflation's bad. Can you explain to the viewers why deflation is bad in your opinion?
Yeah, that's a very complicated question to unpack. But essentially, the idea behind deflation, there's many things that are bad about it, but it essentially slows the economy because you're you're incentivized to hold on to your dollars, because if they're deflationary, basically if prices are going down over time and you expect prices to continue to drop and you expect the buying power of your dollars to increase over time, that disincentivizes you to actually spend money in the here and now, which reduces consumer consumption, which slows the economy down. If people aren't spending as much money, then that can slow down the economy.
That's I've been hearing, and we're not macro experts. I know I'm not. I know Robin's not. But
mac and cheese expert.
That's right. But that I mean, Forrest literally hit the nail on the head. If prices are going down, right? Well, why would you buy now? And so if everyone has that same mindset, what happens to the economy? What happens to these businesses? So, anyways, Forrest, go ahead.
Right, and to expand upon that, a little bit, think about, especially for larger purchases, it's like if you have deflation and prices of a home, like if housing prices, you expect them to go down 2 to 3% per year, why would you want to buy a home that's going to decrease in value over the next several years in a deflationary environment that you could buy cheaper next year, or if you bought it right now, it's going to be worth less next year? So that's kind of it. When you start thinking about 2% drop of deflation over in a can of beans at the grocery store, not a big deal. You're going to buy your chicken, you're going to buy your groceries regardless. But when you start talking about cars and homes and some of these larger purchases, it does make a big difference. So this chart here is IWM divided by or normalized for the S&P 500. IWM is an index of small caps. So what we're actually seeing here is small caps bouncing and performing against the S&P 500. We're on the weekly chart here. So if we zoom in, we actually see that we put in a really nice solid week here, and we're actually trying to break out in this ascending triangle, which you guys know that I'm a big ascending triangle fan. It's a bullish pattern, also a very common bottoming pattern. And usually if small caps, right, if small caps are outperforming the S&P 500, that's indicative of a bull market, so long as the S&P 500 is already or also moving up. So keep an eye on IWM normalized for the S&P 500. If this starts moving up aggressively, right, you can look at what happened towards the end of 2020, right, peaking here in April of 2021. That was a really big move, and that was, peak bull market, right? When we saw this big move out of IWM and small caps. So if we start seeing something like that again, a breakout here, we want to be paying attention, because that's potentially a bull market or a risk-on scenario. So I know we looked at two legacy charts. I do want to take a peek at Ethereum. Ethereum's looking super strong. I want to take a peek at the previous bear market bottoming pattern on the weekly here back in 2019. December of 18 all the way through kind of mid 2019, we had this ascending triangle. Again, this is a very common bottoming pattern for anything that's reversing back up to the upside. It's a bullish pattern. Are they 100% accurate? No, of course not. No pattern is. But this is indicative, this kind of bottoming structure is indicative of a move back upwards. And now in this case, this did for Ethereum happen to be the bear market bottom. Keep in mind, however, this was not normal. That was a freak circumstance where we had a pandemic that crashed the market. We were heading up, considerably before the pandemic, and with ETH, right? So this, for all practical purposes, this was the bottom of the bear market, both literally and if we kind of, ignore the fact or don't account for an uncommon event. And this market structure can just kind of be broken down very simply. Not only is it an ascending triangle, which that ascending triangle should be kind of like down like that, but it's very simple in the sense that you have this big capitulation, you have a large rebound or a dead cat bounce, and then your follow-up correction makes a higher low. And what we're seeing right now with ETH is very, very similar. We had this huge capitulation, and there's no doubt about it that this was a large capitulation. You can't argue that whatsoever. 75%, not even from the all-time high, but from our last, kind of bounce, once we kind of confirmed $3,500, $3,600 is top. We dropped another 75.46% with essentially no correction in between, no relief. We went from $3,500 all the way down to $880 with very, very little relief whatsoever. And then what do we get? We got our kind of our dead cat bounce where the market is like, what is Ethereum doing at $880? We had this period of forced selling, right? And then buyers end up stepping back in, pushing it to $2,000. But then now in the last 30 to 40 days, what we've seen is this nice round bottoming pattern, right? And you'll notice these candles are a lot smaller, a lot less volatile. Right, so the volatility died down. We saw consolidation, we saw accumulation, and that was at a higher level than what we previously had for ETH. Now, on top of that, we do appear to be breaking out from this most recent downtrend line. We do want to be cautious. We do want to be careful, but this is looking very bullish. And one of the things that I am looking for here is a retest of this $1,780 level, and I'm going to throw the margin pressure levels on in just a second. And the potential for maybe we just explode up, that would be great. I'd be super happy to see that happen, but I'm going to be de-risking a little bit at 1780, that resistance there, and I'm going to be looking for this ascending triangle to play out very similarly to what we saw last market cycle with our bear market bottom. Now, Ethereum is just locked and loaded. It's already shown its hand. I mean, we're up in the last 3 weekly candles from this bottom here when the CPI printed and pushed it down to 1190. We're up 30%. It's shown that it wants to rally. Ethereum wants to rally, and that, in my opinion, is a reflection of the merge net issuance supply reduction. We're starting to see those effects take place. So we had a buy the rumor, sell the news event. We came down, and now we're starting to see those longer term effects. That's something that I was, harping on for quite a while. Is like, hey, 15,000 ETH not hitting the market every day, not hitting exchanges every single day. That doesn't matter over the course of a week, 2 weeks, 3 weeks. But when we get to 2 months, 3 months, 6 months down the line, that is a lot of liquidity that is not, a lot of sell-side liquidity that is not hitting the market. And we see that reduction in supply start to push equilibrium price up. So I do want to zoom in here to the 4 hour. And I want to throw on our margin pressure levels so that we can, actually I'm going to have to zoom back out to grab them because I had them all the way over to the left, I believe, on the S&P 500. My chart's kind of freezing up here.
You know what else is freezing? Vegas.
It's not
What's
cold.
freezing? Vegas?
Vegas, yeah.
Is it?
I mean,
It's like 62 degrees.
I'm definitely over-exaggerating for sure, but yeah. It's getting a little chilly.
Freezing is the likes here, man. We can get some more likes up in this chat. Also, Big Chili Willie dropped $4 super sticker. Thank you, brother.
Thank you, Chili. Big Chili. Big Chili.
My trading, I don't know if everybody's using TradingView today or what, but TradingView seems to be just a little bit.
There's a lot of volume on the TradingView. Yeah.
Perhaps. All right, so if we throw on our margin pressure levels, one from our kind of 1190 bottom here, what we're going to see, and I'm going to first remove these short levels, right, so we can see this a little bit cleaner.
And then
but we see that very clean resistance at $1,785. We saw the resistance that we ended up getting on this long margin pressure level off of this local low.
Hey,
we saw
Forrest.
the support come in last night, pressing up against this level again. If we have another move upwards, which maybe we consolidate in here a little bit longer and then move up. Who knows? Maybe we break out this weekend. That'd be lovely. Maybe we even take a trip further down, and this is just, kind of a retest of this level. I don't know exactly what's going to happen, but what I do know is 1785 is a big resistance level, and that's where I want to close. So I'm in that 1260 entry point trade for ETH. Ended up entering at around 1522 off of this SR flip. So adding to that position a little bit and looking to de-risk or close those long positions and enter some short positions at 1785. If I throw off the long levels and I turn on the short levels here, And if I can get this wick correctly, what you will see is, oh, that's the 8X. We need to move this all the way back up to our previous high. Remember that $3,600 or so level? That kind of was the starting point for this large drawdown. That's where the shorts are going to want to hide those liquidation points. And then again, we see this exact same level, 1790. So tons of resistance there. We've seen resistance there hold twice. We saw support in this range. That's going to be a tough level for Ethereum to break through. So if we do get another move upwards, that's where I want to start de-risking a little bit and then look to reaccumulate at the levels that we're at right now as we're building this consolidation, this support, right? And then load back up for another run higher.
Hey, Forrest, can you hear me?
Yep.
Hey, so we have a lot of new people here, and can you just real quick explain, margin pressure levels, just maybe real quick for all the new viewers?
Yeah, absolutely. So the way margin pressure levels work, I'm going to remove all these drawings here, is all we're saying is, look, there's a lot of people in the market, a lot of leveraged trading behavior in the market. The markets are becoming increasingly leveraged as these products become more available to the average consumer. But then you have institutions and professionals that are using leverage in this market. It's a very, very leveraged market, the crypto market is. All we're saying here is we're predicting this support and resistance ahead of time. As soon as we have this big local low, this wick down here, we can already project where our big support and resistance levels are going to be pretty accurately. I mean, this is pretty stinking accurate. And the way that we're able to do that is we're just calculating where we're using the level at which traders, leveraged traders in the market are going to want to keep their liquidation points below on leverage. So if you use leverage, you're multiplying, in this case, your capital by a factor of 4x, meaning you're fronting $1,000 and the exchange is giving you a loan of $3,000 and you're multiplying your capital up from $1,000, your buying power up from $1,000 to $4,000. What's going to happen there is if you enter, right, if you enter here at 1586, and on 4x leverage, you're going to get liquidated, meaning that exchange is going to close your trade and take your initial $1,000 if if there's a 25% move against you, right? Or in the case of a 5x level, it's a 20% move against you. In the case of a 3x level, it's a 33% move against you, right? So what we're able to do is we're able to say there's a lot of long traders here, a lot of longs in the market that want to use leverage, but as soon as price goes above 1586, as soon as it goes up above this level, you can no longer buy it on 4x long leverage and hide that liquidation point below this nice key support any longer. Right, and that's a big deal. That's a really big deal, because as soon as that happens, the incentive to long on 4x leverage, which is multiplying your capital, giving you a ton of extra capital to push the market up with 4x long leverage, as soon as that happens, the incentive drops. Right, it drops. You can no longer buy on 4x long leverage and hide that liquidation point below 1190. Now, as soon as we get a correction here and price drops, I'm going to zoom in a little bit. Drops below this 5x long level of 1487, right? This level right here, 1487.50. As soon as price drops below that, there's a lot of leveraged buyers in the market that are saying, ooh, 1487.50. As soon as this drops down to 1487, I can get a long in. I can get a 5x long in at this price point and hide my liquidation point, protected against this last local low here. Because what's unlikely to happen is price drops all the way down below 1190 and liquidates you. There could be a scenario, however, where price does drop all the way down to, let's say 1190 or 1195, and then it catches support and starts moving back up and you don't get liquidated. These liquidation levels are incredibly important to take into account for traders in the market. So we can just predict that, and that's what these levels do. The red levels are just short levels. They're just from a local high, and they allow you to calculate the same thing, except for your liquidation point on a short is going to be if the market moves upwards, right? So we can see where the shorts are going to want to start coming back in and pushing the price back down.
And I think it's so important for the people that don't leverage trade to understand that leverage trading moves the markets like I can argue like nothing else outside of maybe a big black swan event. So for retail investors who don't use leverage, to understand the levels that these leverage traders are looking at and setting their price targets, you know, it's very important to make sure that we don't get in or get out at a bad time. So,
absolutely.
but you got a chart on Bitcoin for us. What are you thinking heading into the weekend, coming into Monday? What are the charts kind of saying?
Yeah, let's let this super slow chart load up here. I don't know why it's taking so long. I don't have like a lot of tabs open or anything like that. We'll run our ranges here on our margin pressure levels. And you can see we already had some levels marked out a little bit here, but I'll go ahead and remove those. And then I'll also throw on the short margin pressure levels as well, and we'll just run our levels. Let's get this guy all the way down to our range high here, which is around 24 something. Look, I mean, if I'm being honest here, I am just the narrative and the catalyst for Bitcoin, and maybe we saw that massive outflow of Bitcoin from exchanges. Maybe that kicks in, and maybe we see Bitcoin explode. But the narrative right now is Ethereum merge. The catalyst for Bitcoin is the 2024 Bitcoin halving. So for me, I want to play. Don't get me wrong. I might not be the most constructive person in the world on Bitcoin, but I'll play the 2024 Bitcoin halving. I'll play that catalyst all day long, and I'll look to get some longs in going into that catalyst and play that and trade that. Right now, we're just in that dead zone for Bitcoin, where we're in the middle of the bear market. We're kind of far away from a Bitcoin halving catalyst, and we're in the midst of this Ethereum merge catalyst starting to kick in. We're seeing altcoins and we're seeing other projects just outperform right now. There's a little bit more of a narrative for stuff outside of just a store of value cryptocurrency use case. There's like the metaverse, blockchain gaming, DeFi, all of which are big things. So I'm not crazy constructive on Bitcoin from a trading perspective. I think it's going to be a little bit less volatile than the rest of the market here. But we do clearly see it is respecting our margin pressure levels. And whenever we run margin pressure levels, we want to find the zones of confluence, basically the zones where there's a few margin pressure levels in one concentrated area. So we see that at around $20,100. That was our support level. We see that resistance at $21,000. So again, that's going to be resistance here. You could look for a short at this level. If we load up and go to that next level up, that's going to be 22K. So 22K is going to be a bit of a resistance level for Bitcoin. And then we do see 23.4 is another resistance level. From there, it's 26, and we start moving into some resistance. Don't get me wrong. I would love to. I'm not a Bitcoin hater. I'm not a crypto hater. I would love to see Bitcoin move up considerably higher. I'd love to see it move up to $28,000, $29,000, where we do have some larger resistance. We've got our 2x long level all the way at $35,000. I don't think it's out of the question in a really bullish bear market rally scenario to see Bitcoin push back up to these levels, and that would be fantastic. Note that in previous bear market rallies, we saw Bitcoin move from $3,000 to $14,000 in a very short period of time. Right, so it can happen where you see a 300% move in a bear market rally. It just doesn't seem like Bitcoin is showing its hand yet. It doesn't show signs of wanting to explode upwards. If it does, if we start to see a lot of volume and we start to see Bitcoin take out this, this 21K level, right, and make support on top of that, okay, now we can start, we're starting to challenge the top of this range here, and then we can start to look for some larger swing trades, maybe target from 23 to 26, and then, from 26 to maybe even 28, 29, 30, 35. But right now, there's a little bit lower volatility, less volume coming in for Bitcoin. And until that happens, I think the right thing to do is just to range trade it. And these are our levels. So to recap our levels, our three, I accidentally got rid of the short levels there. There we go. Our three levels here is $20.1 to $20.2 thousand. We've got resistance at 21, and then we've got more resistance at 22. So Trades taking bounces in between these levels, I think could be pretty lucrative in the meantime. I wouldn't be surprised to just see, hey, look, we ranged down here for quite a bit. Would it be so crazy to see us start to range a little bit higher sideways for the foreseeable, next couple of months?
Amazing.
What are your thoughts on this whole Elon Twitter thing?
Hold on, man. Hold on. Why are you jumping the gun? I'm the flow guy. I control the flow of the show. You're over here like, I got a plan, bro. Relax. Forrest, we are talking about Elon Musk, and we'd love for you to stick around if you have the time.
Yeah, I've got the time.
Beautiful. All right, so let's get right into it. Give me 2 seconds. Let me pull this the news up here. So we have a couple things regarding Elon Musk. The first thing is Musk's Twitter to add NFT trading feature called Tweet Tiles. This source from Ethereum World News. Twitter announced the development of a blockchain feature for NFTs, dubbed NFT Tweet Tiles. The update could allow users to buy and sell NFTs through tweets on their timelines. Four marketplaces will serve as partners in the update, and NFT Tweet Tiles will showcase NFT images via tweets with details including the name, the creator tag, and an option to view the digital collectible on one of the four marketplaces. What are your thoughts on this, first of all?
And also, Doge is straight pumping, up 10%.
Yeah, there's
about to flip Solana.
Everyone's speculating because Elon took over. If there is a Twitter wallet or something or payment, it's going to be Doge. What are your kind of overall thoughts on that? Plus, the new Twitter Tiles kind of seems like a marketplace on Twitter.
Yeah, so that's actually the first I saw the headline of the Twitter Tiles. Look, I am kind of the next bull market we get. My goal is to steer clear of NFTs.
Why is that?
Primarily focus on tokens. I'm sorry?
Why is that?
Just the liquidity. The liquidity in a bear market just seems to dry up really bad for NFTs. And I feel like, yes, there's those 50x, 100x opportunities with NFTs, but you're also going to see there's some large opportunities in tokens, and I'm personally very comfortable leveraging up my capital to see that to get those higher gains in with fungible tokens. And NFTs, it's just one of those things where a lot of times it feels like it's an all or nothing type deal where it's either going to go to zero or it's going to establish a higher value. So that's just me personally. I'm not saying I hate NFTs by any means. I think there's going to be incredible opportunities to make a lot of money in NFTs, but I'm just personally tailoring my strategy to avoid NFTs. And look, I mean, I'm working on an NFT project at the moment, and that's not to say that I'm, not bullish on the future and the utility of NFTs. It's just from a making money standpoint, from a strategy standpoint, I want to focus on where there's liquidity in the market.
Fair enough. What are your thoughts, Robin?
And then,
oh, sorry. Go ahead, Forrest.
Oh, go ahead.
No, please.
All right, I'll go real quick. Just my thoughts. So we're seeing more adoption when it comes to NFTs in all social media platforms. I mean, not only in Twitter, also Facebook, Instagram. So I think that's just part of the game now. But I see what you're saying. I think that the next bull run will be strong in the NFTs, but I think it's going to be more in the digital identification as far as corporations using NFT technology to transfer data for consumers. I think that it's easier to keep, say, a driver's license and passport or your car insurance instead of it printed out. Just having a lot of people have the car insurance on their phone anyways, so it kind of makes sense to do that. Ticketing as well. But I think the biggest sector is going to be in the music. I know you're pretty passionate when it comes to NFTs and music. I think it enables or gives the power back to the artist. And I think a lot of people are dismissing also entertainment. So in the same way that you rent and download movies right now, I think that just makes sense to NFT it. I mean, if you're going to own a movie, you lose all rights to the movie if you or you can't access the movie if you lose your account, right? If you lose your password login. So I know there's a couple streaming services where you can purchase it, like say through the Apple TV service as an example. You can purchase the movie or rent it, and if you purchase it, that just makes sense. It makes sense to make that an NFT, right? You're going to purchase it. Why not own the rights to watch it as many times as you want? So that's something I'm looking forward to. But I think the JPEG kind of NFT, I think that's gonna be we're gonna talk about it like, oh hey, remember 2022, the rise of the NFT JPEGs? I think that's what we're gonna have there.
Yeah, exactly. That's kind of more the NFT that I'm talking about. Still incredibly constructive on music NFTs and entertainment NFTs. Interestingly, that entire idea of storing files on the blockchain. I mean, that's where you have stuff like Arweave and Filecoin stepping in too. So those are two examples of, hey, you can actually invest in that kind of use case. By buying a fungible token, you can they have NFT applications, or they're going to be used to store those NFTs on chain. So, but as far as the Elon thing, I'm a fan of free speech. I'm a fan of this acquisition. I'm not a super mega Elon fanboy like a lot of people are, but I don't hate the guy by any means, and I think he means well. And I think he's a lot of people think he way overpaid for Twitter. Honestly, I think like the way he's going to monetize it, I think it was just way under monetized, and the reason it seems like he overpaid for it was probably because they weren't even scratching the surface of how much revenue that they could actually pull out of Twitter. So it already looks like the NFTs and then payments. I would like to think. Elon's a smart guy, and Dogecoin is just like incredible from a marketing angle. But I would like to think that if he really is serious about doing a payment network, he would do it in something other than Dogecoin. I could see him doing it in Dogecoin just because that would capture a lot of attention. But I also think there'd be like a lot of pushback. Like, I don't want to hold value in Dogecoin because, like, if you look at the Dogecoin chart, it pumps and dumps. Who wants to really put a meaningful amount of their wealth in something that's that inflationary and something that that sees that far of drawdowns and is that volatile? I don't know.
We did have a member of our community earlier. He would do that for sure. Sammy was his name. Remember Sammy?
Yeah.
If you're an OG here at Sin City Crypto, if you're an OG community member, Sammy, what's our Doge going?
So you brought up payments and also in reference to Twitter.
Binance is actually partnering with them.
Yeah, they are. But one good example that one competitor you could say would be WeChat. So WeChat is also a communication social platform of sort, and there is a ton of payments moving through the WeChat system. Here in Las Vegas, we do take WeChat payments in a lot of establishments here, and I could see something like that where I think there are more people using Twitter than there are using WeChat. So if you could get a large proportion of the users to transact via that service, what you mentioned, the monetization possibilities. Could you imagine if, say, even 5% of Twitter users started using some kind of payment system that's integrated to Twitter? How much money they would generate from that?
Well, speaking of use cases and utility and adoption, I want to move on to, we have to cover this before we sign off. Visa, their trademark filings hint at a launch of a crypto wallet. This is a source from Yahoo Finance. Visa filed 2 trademarks that hinted at plans of launching a crypto wallet. Applications for non-downloadable software used to, quote, view, access, store, manage, trade, send, receive, transmit, exchange, cryptocurrency, digital blockchain assets, and NFTs. That is the language that was used in their trademark filing. It also hinted at metaverse ambitions, filing for software, quote, providing virtual environments accessible in the virtual world.
Did Visa just drop the mic, bro?
I mean,
because, we heard a lot of buzz about a MasterCard, but
I mean, look, this is why competition is so important. Because you have a company like Visa, the largest payment rail or payment remittance provider in the world. They process millions and millions of transactions a day. And if they are going into the space, into the crypto and blockchain space, and launching their own wallet, I mean,
It's saying buying, selling, and trading too. It's not just custodial.
yeah, like if that doesn't tell you you're in the right place at the right time, I don't know what will. Like, do you guys share the same sentiment?
Yeah. Yeah, you can't. It's gotten to the point where the innovation is so great that it can no longer be ignored. I mean, you've got the Visa, Mastercard, you've got BlackRock. Like, if you're a large player in the space, whether it's payments, investments, otherwise, you are going to be left in the dust, and they know that they're going to be left in the dust if they do not get on board in some form or another. I don't know that anybody is 100% certain about what mass adoption is going to exactly look like, but they understand that it's coming. They understand that this technology is innovative. They understand that people are interested in it, and they understand that they need to get on board and start getting on board now, or else they're going to be left in the dust. And it really begs the question, too, when you have like these big players, Visa, and then you've got the speculation about Twitter and Dogecoin, and then you've got Solana Pay and the Solana phone, and we're taking these steps towards people potentially starting to use crypto on a more regular basis. It begs the question of like, what's the average person, right? What's the average person going to want to? What tokens? What cryptocurrencies are they going to want to? Like, if you just have a portion of your wealth at any given point subjected to crypto based on the fact that you're using it, you're paying with it, what cryptocurrencies are those going to be that people are most comfortable holding? Is it Dogecoin? Is it Ethereum? Is it Bitcoin? I personally think what'll happen is we'll see a shift towards things with really, really sound supply side tokenomics, where you can rest assured that, hey, there's not going to be huge inflation coming in and devaluing the price of the value of your crypto. But yeah, we are absolutely moving towards mass adoption. It's just, what does that actually look like in 2 years' time? What does it look like in 5 years' time?
Even if corporates don't believe in even like Bitcoin and Ethereum, the writing's on the wall when it comes to crypto moving around in the form of stablecoins and CBDCs. And so the stablecoins, Circle, Tether, Paxos, these guys are building, people are using them. And, there is a legitimate argument that can be made that they will have more market dominance than, say, just your blockchain tokens like Bitcoin and Ethereum if you look out 5 to 10 years. And on top of that, you got CBDCs moving around on blockchains. Now, will CBDCs move around on the traditional Web 2 style with servers? Maybe. I could see a little more centralization being a possibility there. But as a company, as an infrastructure payment operator like Visa, even if you don't believe in Bitcoin and Ethereum, you know that stable coins are more efficient and they're coming. Companies are going to want to use them. Retail is using them right now. So, yeah.
Speaking of stable coins, the last thing we're going to talk about, FTX announces plans to launch their own stablecoin. Sam Bankman-Fried said it is very likely FTX will launch a stablecoin. He also noted FTX already has the know-how to launch the stablecoin, but they prefer to do it in partnership with another company in order to make it more powerful. Okay. The announcement comes just days after Sam Bankman-Fried predicted the start of the second great stablecoin war. So he tweeted that, and then they're saying they're launching their own stablecoin. Are we going to see more of this with exchanges? Like, is Coinbase next? Robin?
I don't think Coinbase is, because they're a publicly traded company, and you're going to run into a lot of security issues. I mean, just when they started discussing getting a yield on staked tokens on their platform, they got threatened by the SEC. And now, not surprised, FTX. Honestly, I mean, as a business decision, I mean, why not? I mean, if I was an exchange, it kind of makes sense to have a stable coin. why would you offer the competitions when you can offer one in-house, especially if you're just using it to facilitate order books? Now, I know other chains have expanded on it. Crypto.com has a Chronos chain. Binance has the Smart chain. Will FTX go that route, or are they just simply using it as a means of exchange through their order books? That's to be seen. But tons of money get locked up on your platform,
this is. I think this is negative for stablecoins like USDC and Tether. Because if every exchange starts launching their own stablecoin, like you saw what happened with Binance, the BUSD, they dump more money into it, and they swapped all the USDC and USDT pairs to now BUSD. Are we gonna hold on? Are we gonna see the same thing with FTX? Are they gonna get rid of all their USDT and USDC trading pairs? Maybe not all of them. And then what if KuCoin decides to do the same thing? Or what if Crypto.com decides to do the same thing? What does that mean for USDC and USDT moving forward?
I just think, and then also you got the banks too. I think at some point banks are going to start entering in, because right now it makes sense with the exchanges, but
then I'm hearing rumors that if Core Scientific does go into bankruptcy, then SPF wants to buy them out. Like, I don't know. Forrest, what's your thoughts on this?
Yeah, so I mean, the main launching a stable coin is like how to become a bank without getting a bank charter. Like, if you launch a stable coin, you're officially a bank. Like Tether's just a bank. Like, they take in like US dollar deposits, and then they issue a on-chain USDT, and then they keep it one-to-one backed, or so they say. But in the meantime, they can take all those dollars, those real dollars that they've taken in, and depending on the laws of where they're regulated, and if they're offshore, I mean, they can take those dollars and use them for what, I mean, they had them in commercial debt for a while, which is going to be kind of riskier, high yielding notes. Right, you could go with a lower risk strategy. Imagine if you could imagine how much money you make. If you take in $1 billion, you issue $1 billion of your Magic stablecoin on chain, right? And then you take those $1 billion real dollars and you take 100, you're still keeping 90% of that ready for a bank run or withdrawals. And you just take 10%, $100 million, and put it in a quote unquote risk-free U.S. Treasury, backed by the full faith of the U.S. government, even though we just saw treasuries get crushed. But if you put it in a short term, 3, 6, 12, 2-year bond, on that $100 million, you could make, 3-4% per year. And then that's $3 to $6 million a year that you're making just for holding people's money and issuing some on-chain transactions.
Right. I'm glad you brought up that example, because we were at Money 2020. We interviewed Paxos. So they have a pretty dominant stablecoin. Anyways, we were discussing their
attestation.
Yeah, their attestation on there, and what they said was that they're taking no risk, and that everything is liquid cash or equivalent. But they said that in their portfolio they have 90-day lockup with treasuries. And I'm not sure exactly which one it is or whatever it is.
Treasury bills.
But they're receiving, I think she said 2 to 3% on a 90-day lockup. Yeah. So every 90 days you're still getting 2 to 3%, man. I mean, it's insane.
Yeah, and if you have $1 billion, you're like, and you keep half of that in 90-day lockups, earning 2 to 3% APY, you're just making a ridiculous amount of money. It's so attractive to launch a stablecoin.
I agree. We'll see. A lot of things unfolding. What we do know, whether it's in crypto or traditional finance, the sharks are always out. When they sniff blood, they attack. And so, perfect analogy, because Robin always refers to Sam Bankman-Fried as a shark. But if he smells blood, if Core Scientific's bleeding, and he can gobble him up and just expand his tentacles in the cryptocurrency space that much more, we'll see how that plays out. But Forrest, thank you so much for joining us, my friend. We look forward to your spooky coin video on Monday. Also, guys, if you're new here, I've never seen Forrest, go support him. Go follow him on YouTube, Crypto Stackers Pro. Also on Twitter at 0xStacker. Rocco, will you throw up his Twitter handle up there? He tweets a lot of his trades. So good stuff on there for us. We appreciate you.
Crypto Stackers Pro software as well.
That's right. That link is in the description as well. So, Forrest, have a great weekend, my friend. And we'll see you Monday.
For the Halloween special.
Thanks, guys.
Thanks,
guys. It's always a pleasure.
Wait
Hey,
till you
pleasure's
see
ours, my
our
friend.
costumes. It's gonna be good.
All right. Well, God damn. All right. Rocco. Finger tornado. Friends, family, friends of family, and family of friends. We thank you so much for ending your week with us here at Sin City Crypto. Make sure to come join us Monday for our Halloween special. Lots of famous guests joining us. Also, check out all of our social medias. If you want some merch, the link is in the bio. And become a member, support the channel. Link to that is also in the description of this video. We have myself, Robin, the Don, and Kyler Murray. We love you guys. Have a great weekend. We will see you Monday, 10:30 a.m. Pacific Standard Time. Peace. Naked Canadian, the gentleman with the hat, or no, the Rocco, show your face. So the guy walking in, that's Kyler. He's part of our production team, and then Rocco is our business partner and our the man on the ones and twos. So we're all Sin City team here, guys. So yeah. Have a good weekend.